2001 was internet boom, techs rallied. It took Microsoft 10, 12 years to really become relevant from a stock market perspective. It missed out the 2001 to 2008 7 uptick. All techs missed out. No one cared about Amazon stock price in 2006 7. Relatively, I am saying. So if that happens, then even if an uptick were to happen here on, there's a very high probability that 95% of companies who are the darlings in this upmove will get left behind. A new set of companies, new spaces might emerge. I have no clue what those could be.
I do feel in India for a long time we've been a kind of a tech deployment market, but I do think what is happening now in India and the shift we will see is we will become an originator of new innovations, an originator of technologies, many things that will come in the next wave that could create new kinds of use cases, applications, and so on. And I do feel that for the first time we have the chance to play alongside the leading countries. So it won't be a situation where some company outside takes the lead and then again comes to India for deployment. I think what could happen is some Indian company takes the lead in the Indian market and then is able to globalize and frankly become a pioneer of that category potentially.
Hey Nimish, hey Rajeev, welcome to Bharat Varta. So good to have you guys on the podcast. I think the last time we spoke, it was dramatically different circumstances, September 2021. We're going to talk about startups on this podcast. Things have turned quite drastically, right? So Rajeev, you want to talk about what this year has been like in terms of startup activity and so on?
No, so clearly, Roshan, first of all, thank you for having both of us again. So this year, I guess the hangover matches the binge, right? As the saying goes. So most of 2020, 2021, that era had become like a clearly in hindsight a period of excess, and 2022 has been a kind of year of reversion to the mean and rebalancing. So we are seeing it in the numbers as well. So as per the data being put out about the amount of capital deployed this year, there is a decline of about 35% already for the first 9 to 11 months of the year. And generally, I think the late stage market probably is affected much more in terms of the ability of some of the growth stage companies to raise the large amounts of capital that they were closing last year. The early stage market, I mean, we'll have to wait till all the data is published, and we'll have that in another month or so. But my hunch is the early stage market is still probably holding up, but the later stage growth rounds are where the maximum impact will be felt.
Right. So Nimish, personally, things have changed for you as well, right? I mean, this year you became a founder as well. So what are we seeing in the market? I mean, is it because 2021 was such a bull run of bull runs? Are we seeing that in stark contrast to that, or do you think aside from that also, there's been some kind of a adverse impact?
Yeah, I think, see, I want just to guide from 2021 in a perspective. 2021 was probably the zenith of a multi-year cycle where capital was pretty easy, cost of capital was zero. And when capital is cheap, obviously a lot of bad habits get built over time. They reached a crescendo in 2021, but maybe it started 7, 8, 9 years earlier, before 2021, when the quantitative easing and subsequently this started. Clearly, there has been a 180-degree change in terms of, be it the funding environment, the company behaviors. And now that I have moved geographies as well from India to the US a few months ago, you see it more and more out here because of few things. One, there are a lot of public market companies. So there is a mark to market of pricing, stock price every day, every week, every month. So you can't really hide behind private valuations. What that does is a big chunk of compensations for a lot of employees was in stocks, and there was a certain net worth in 2021 which has been suddenly eroded, and that further sort of reflects in the day-to-day interactions or behavior that I have as part of my responsibility out here. So that is one big element. Add to that all the employee churn and all that you are seeing. So that's the people element. And secondly, capital not being there, valuations going down, difficult to access capital is also driving a lot of behavioral change in the companies themselves in terms of spendings. There were four key spends, I would say. All the capital that came in, if you were to classify it, went in four broad buckets in the last 8 9 years. One was cloud spends, so AWS and all. Now they're like, second was the marketing spends, online marketing or brand marketing. Third was employee cost, and fourth was discounts to customers or suppliers, whichever way the marketplaces or what work. And you are seeing cuts across all four, drastic cuts. And having seen some of 2000 2001, I say it, we are definitely seeing a repeat of that, but on a much higher scale. So 2000 2001, all this was by and large localized or in a big way felt in the US. This time around, all geographies have seen the tech boom in significant ways. In 2000 2001, maybe how many companies, tech companies, had 100,000 employees or even 50,000 employees? That number is a big multiple. So yeah, it looks like a painful process of a reset. I don't know how long it will take, but that's the way I see it from. So it's not just a 2020. Yes, mood has changed 180 degree
Hmm.
on 2021, but the build up. So what we have to see is the build up happened over a 8 10 year period. So the correction can't be a 6 month or a 1 year correction. Just it will be longer. That's just my personal view.
Right. Yeah, I think a lot has happened aside from the funding itself, right? And in terms of innovation or industrial policy and so on, I mean, we'll get into each of these, later in the conversation. I think that still was thriving, right? And I remember reading this thread by Chris Dixon. Where he talks about product and financial cycles being independent of each other, kind of, right? And he talks about how some of the best companies, whether it's Slack or MongoDB or Nutanix or the likes, were born at less than ideal times. So I think I have seen a lot of activity in newer spaces, like EV, for example, space tech, drones, and so on. There's been a lot of activity on that front, and I would hazard a guess and say that early stage has been more or less constant, right? Whereas growth stage has declined, drastically, right? Nimish, let's talk about the Musk effect, right? I mean, we're seeing plenty of layoffs. We're seeing a tightening of work culture. People have been asked to come back to offices and so on. So, in some sense, I mean, Musk has kind of triggered this reversal to the mean, right?
Yeah, I think definitely. See, there are enough and more smart people in the valley. I think some of the smartest. It's not that none of them didn't know that there are excesses. And if you see the all most big companies, they were built during relative scarcity. Google, Facebooks, Apples, they didn't have the good fortune of having unlimited capital access back when they started. So I refuse to believe that they didn't know or didn't realize. It's just that these decisions are whether you're choosing popularity or effectiveness. And clearly, Musk doesn't care about popularity. That's the way he's built his earlier companies. And now that he has shown the way, two things happen. One, floodgates have been opened. Calling people, some simple thing like asking people to work from office had become a taboo right here and maybe globally as well. That is gone. Now you see companies like Snap mandating a 4 day week. I think Apple was already there, but I see the floodgates have opened. More and more companies are doing to do. Second, he raised questions on the food cost. I mean, I think $400, some such number per employee per meal, or some such big number. There are enough and more excesses, and even I expect those to get reversed because in a zero cost of capital environment, even all the loss making companies were providing all this, which when their core businesses are not sustainable. And now if this becomes the norm, everyone will follow that norm. Coming to office, all the fringe perks will go away, which are unnecessary. I would fully expect some salary corrections as well. I mean, they won't cut, but maybe incremental hires will see that. So I feel definitely Musk has this, and even for bigger companies, right? Now, I'm sure board members of all these big tech companies are asking their CEOs or CXOs that if Twitter can suddenly fire half of their workforce, all tech product, and can run well, okay, you can say at the margins some innovation might go, but why can't we? Okay, if not 50%, can we look at a 20, 30%, 40% cut? It can't be that we are efficient when Twitter can operate at 50, 60% of their employees and without anything. So I guess
Well, actually,
it was
it's pretty
needed.
fascinating image on
Yeah.
that. Twitter slashing its workforce in that manner, and you guys might have seen that there was this huge outrage that Twitter is going to go down, and who will run the show, and this and that, and a few weeks later, nothing has happened. Actually,
Yeah,
Yeah,
it's
and I
quite
think
amazing.
I'll add another thing right now that I am more on the tech side, as in I'm not a techie at profession, but I am at the heart of a technology business, and at least you see a lot of people. So some of the things is 10 years ago when Netflix, 10, 12, 15 years ago when Netflix was developing streaming technology and all, it wasn't as prevalent. So the engineering effort needed to perfect that streaming technology is more. So you need super high quality engineers spending a lot of time to perfect something like that. Cloud was also not there. Those things. Imagine a Disney Plus or someone has replicated by and large that Netflix streaming technology in maybe 1 year, 2 years at curve of that getting some of the technologies to that scale, which best quality is also going down learning curve simply because lot of software gets open sourced, learnings are there, more experienced engineer. So that makes you question again, why do you want so many people when a lot of knowledge management repository is already sitting all across globally? And until now, tech employees of startups, tech product, they were considered as holy cows. No one really touched them. But again, so that holy cow thing will go away. So I feel, yeah, that's how I say. I think it's probably 5 7 years down the line when we look at it. I think Musk taking over Twitter will be revolutionary in maybe more ways than one.
yeah. No, I kind of agree with you, and I think I would trace it back to Google starting with this whole bring your authentic self to work thing, right? I mean, I think the 2000s or something, you can do your laundry here, we'll provide pet care, and so on and so forth. I think the balance had swung crazily towards all of this stuff, and Musk has caused a reversal, no doubt about it. I think it's a watershed moment for sure. And what you spoke about tech is so relevant because you think about Zerodha, right? I mean, the largest exchange today in India, right? They have a 30-member team. That's it, 30-member tech team, right? And running an exchange is not a trivial thing. I mean, it is super super hard technically, right? And you gave the example of streaming, for example,
मतलब
right?
broker to be accurate.
Yeah,
Yeah,
correct.
yeah.
Yeah, exactly. Broker, sorry. You gave the example of streaming, for instance, right? I mean, the amount of work that's happened on the database side, right, over the last 5 years, even, right, with the likes of Snowflake and so on and so forth. I mean, it's made a lot of amazing things possible, really. And how AWS and the cloud guys itself have sort of progressed. So, really, in that sense, questioning developer productivity is key, actually, right? I mean, there were a lot of excesses, not just in the obvious, hey, why are we providing pet care at office, for instance, when we're not making a profit, to even actually questioning headcount and questioning developer productivity itself. And yeah, as Musk says, right, you can't build things from a one arm distance, right? I mean, you have to be on the floor, so to speak. And if you're going to do the most important work of your life, you have to maybe spend 80 hours a week. If that is your calling, then so be it. If you're not that kind, then he's been very direct about that, right? Yeah. Rajiv, we've copied some of these excesses in India without having the capital as such, right? Without having built such businesses here, right? I mean, we're talking about Google, Microsoft, Amazon. These are large businesses. They could maybe somehow get away with some of these things. But even some of these startups right now, you take maybe consumer tech startups, etc., or ed tech startups who are kind of bleeding cash. Even these folks had some copied some of these excesses, right?
No, for sure. Many of the good things about Silicon Valley and its culture were emulated in India, and many of the not so good things also came along with that. So I just see it as part of a package actually, but just the way market conditions are forcing the hand of companies in the American ecosystem. Similarly, the same kind of thing is playing out in India, where a lot of companies are realizing that maybe the growth round which they were thinking of 12 months ago, someone could have thought that we are raising X now, and in another 18 months we raise 2X or 3X. But come that period, you would find that the market may not be so receptive based on the same kind of trajectory. And suddenly, in the last 6 to 9 months, profitability and sustainability and good unit economics, all of that has come back to the fore. All of these sound fundamentals were not being spoken of too much in the go years. And Nimish is absolutely right that we can see the 2021 period as a culmination of a sustained period of kind of low interest rates or zero interest rates, where essentially free capital, free money facilitated many things. Those who succeeded in the environment, obviously great for them. They were able to create a business, maybe exit the business, and they are sitting pretty now. But there are many companies, of course, which are not used to working in a higher cost of capital environment, and that's where I think some challenges could emerge for even like the mid and large size companies.
Right. What are you seeing with VCs, right? I mean, because I think, we're calling it the funding winter, but if you look at it, we've raised something like $18 billion, right? I mean, VCs itself in India have raised a lot of dry powder. In fact, just this week, or last week, rather, Bloom raised a fourth fund, right, of $200 million. Now, all of these folks are obviously sitting on a lot of cash, right? I mean, this cash is going to get deployed sometime in the next couple of years. Do you think that they're kind of waiting on valuations to get a little more tempered? Do you think they're waiting on the uncertainty to sort of reveal itself a little more, or mitigate risks, whatnot? I mean, do you think this money will come into the system maybe in 2023?
So one thing that is certainly happening is the way Indian public markets have held up this year, including for some of the tech companies. I mean, yes, they've taken a battering. The listings in tech which happened in 2021, they have taken a battering. But if you compare them to similar businesses, for example, that are listed in the US, their multiples are still higher in India. So one could argue that there is further downside here, or one could argue that the Indian market is simply valuing them differently now. The Indian stock market is giving a higher premium than the American market to similar companies. And then, of course, the fact that PE funds are sitting on dry powder, they are obviously mandated to invest in these kind of early stage and growth stage companies. So I think both these factors. So in the medium to longer run, I am sort of more optimistic. I feel that 2021 was a true watershed in the sense that the opening up of listings and initial public offerings for new age companies was truly a breakthrough moment, because now in India you can raise the entire capital stack from angel and seed stage funding or early stage funding all the way through mid stage growth stage funding through to a potential listing. So obviously the bar is higher now to go public, but the fact that you can do the entire cycle, complete the entire cycle, if as an Indian company, as an Indian domiciled company, is something remarkable. It's something new that has been unlocked in India now.
Yeah. No, you mentioned public market valuations, right? And I think here again, there's been a sort of a massive correction. Last year, private market valuations were insane, right? I know a company which perhaps raised at some 65x forward multiple, right?
Revenue, right? Or not earnings,
Revenue.
revenue.
And it's insane, right? But then, I mean, now if you look at some of the best SaaS companies as well, I mean, they're trading at 8-10x right now in the US. So Nimish, I mean, how much of these, the stocks of, let's say, the FANG companies, or the stocks of some of the public tech companies taking a beating, right, 50, 60, 70% down, how much of that has caused an impact in terms of the funding and valuations itself?
See, two, three things. I mean, I'll just break my answers. One, of course, is from an India perspective. I fully agree with Rajiv that, of course, things are going to be slow. Early stages happening, but the valuations are much lower, maybe at least at 25-30% of what they were same time last year. But that is happening. I don't think just because VCs have raised dry powder money will be necessarily deployed, especially given what's happening. You've seen some major blow ups and all. So they are also going to be much careful because reputational hits from some of these are much higher. But from India perspective, yes, I would say it is much easier to be an entrepreneur today than any time in the history, because capital is available, and valuation matters only if the company becomes big. Otherwise, if you dilute 20% or 30%, it's big irrelevant. So that is for sure. Second, I think, see, it's public market valuations. Probably most companies started peaking tech. I use loss making tech as a bucket, and there could be different companies. I think they started
That's an
peaking
interesting
around now.
category.
Yeah, that's what I always. I think I had referred to it in one of our earlier podcasts as well. But October, November 2021 is when they peaked. So while people might, the euphoria in private markets continued, public market valuations of loss-making techs peaked around October, November 2021. And from then on, they have corrected. It's 80-90% correction in many cases, most cases. Now, the thing is, at least in India and all, or in most globally as well, I haven't seen private market corrections follow that, because people are trying to structure something, convertibles, trying to be creative, but those things can only take you so far. So I think one for sure, big dip, down rounds, forced mergers. When some, I think there will be a painful process of reset, maybe 6 months, 12 months, whatever time. I mean, look at this, like someone like Klarna raised at 60-70% lower valuation in private markets. I think it's Klarna only, right? So I think they're smart. They did it early. Others might not even get that. So I think that one process of reset of private market valuations is definitely going to happen. India, US, everywhere. The third part is, if I were to look at 2000, 2001, or 2007, 8, there was this, and the uptick happened later on. See, typically, and that's that's where I don't know how this year this will play out, because in there are two factors there. One, the same stocks never carry the market up next time around in the next rally. So 2000, 2001, there's internet boom, techs rallied. It took Microsoft 10, 12 years to really become relevant from a stock market perspective. It missed out the 2001 to 2008 7 uptick. All techs missed out. No one cared about Amazon stock price in 2006 7. Relatively, I am saying. So if that that happens, then even if an uptick were to happen here on, there's a very high probability that 95% of companies who were the darlings in this up move will get left behind. A new set of companies, new spaces might emerge. I have no clue what those could be, but just looking at the market, that's one. So that's bad news. Second, from a pure tech perspective, right? And I read, this is not my own thought, I had read it somewhere, was in 2000, 2001, see, internet was already getting more and more mainstream. So even though the stock prices which were overvalued, they collapsed, the idea had gotten hold. There's opportunity to slowly grind and build new businesses on this new phenomenon of internet. 2007-8, after iPhone launched, again iPhone smartphone had become started becoming prevalent. And if you see, all tech businesses or most businesses have been built on top of that smartphone. So this time around, I don't know, initially people thought Web3 would be that new technology which will take over, I don't know, maybe metaverse. But there is no technology which is already very prevalent, as in getting adoption so much. Businesses will then get built on top of that. So that's the other thing. So I don't know what those new areas, new companies could be. But if I were a betting man, then I would say maybe 9 out of 10 companies which have gone 80-90% down, they're gone. I think it's very difficult to recover, because you have to grow 9x just to be back where you were. And look at it, even a company like Wipro, the two stock price which it hit in 2000, people need to dealing business from valuations also. it hit the stock peak in 2000 or 2001, I don't know. They got back that price in 2015. And imagine Wipro for those 15 years was maybe compounding at 30-35% cash. They never needed external cash. They solid this. So if you
So
they would
yeah, I
have
mean,
come.
it was a terrific business. That's true.
It's still a terrific business. It's generating crazy cash, but it took 15 years for Wipro to get back. Maybe I'm sure some such stats for Microsoft, Cisco would already also be there. Those 10 years were so.
And also, Nimish, just to add to that, actually, we are talking about the survivors, right? Like there were similar
Yeah,
companies.
exactly. This is like that's why I said 1 out of 10 survived, right? 9 out of 10 is gone, and even though survivors took so long to sort of get back, and it's just to recover, not surpass.
There were many other kind of maybe similarly sized companies like Wipro, which basically withered away in that 5, 7 year, 10 year period.
Yeah,
And
and this
similarly
is
with
after doing good business.
Like Cisco, I mean, other network equipment providers,
Yeah.
other companies like Microsoft, other SaaS players, they would have just withered away after that boom period.
How much of this in the private markets do you think is to blame on the likes of Tiger and SoftBank? I remember reading this article by Everett Randall called "Playing Different Games," right, where he said that look, Tiger has completely changed the game, right? I mean, people are sitting on due diligence for weeks together, maybe months. Tiger, with its fast deal making as such, completely changed the game, right? And then I read this Anand Lunia article. He is a VC at India Quotient. He put out this article last week, again very very pertinent, where he said that as a startup nation we seem to have chosen fundraise as a destination and secondary sales as a price and high spends as the path, right? I mean, I would encourage everyone to check it out. Very nicely written article and very bold of him to say that as well, right? Where again he referenced some of these excesses and the fact that the startup building itself, right, has gotten slightly corrupted with founders choosing a different sort of a route and not just looking up to the likes of maybe Sridhar Vembu and building sustainable 20 plus year businesses as such. So, Rajiv, what do you think about that?
No, so that was a terrific op-ed, I think, by Anand, and I think he really hit the nail on the head that sustainability aspect, that kind of profitability aspect, and kind of avoiding, trying to create an iconic breakout company, that growth at all costs mindset, often bending proper even governance and stuff, and the aspect of secondary sales. So essentially this whole get rich quick kind of psyche, which attracts its own kind of dubious characters into something which is should be more noble. I feel, at least, maybe I'm being foolish and idealistic here, but I do think that there should be more kind of commitment, at least, to actually business creation, business building over here. But I just see it inevitably as a side effect of a kind of a growth phase. Every boom attracts its share of hucksters and those who are in it just for the money and nothing else. I mean, I have obviously nothing at all against wealth creation and founders, investors doing well financially, but there is a set of people who are in it only and only for the money, and somewhere when such characters are gaining traction, then inevitably you will find that all kinds of corrupt practices come alongside. So I think Anand flagged that very well, and highly recommend reading that to the viewers who've not read it.
No, I think it's very apparent, right? I mean, when you look at the startup ecosystem itself, it's very apparent that there are two types of businesses right now. One where they focus on the startup as a business basically to earn revenue and more importantly profits, or at least a path to profitability, and the other which kind of focuses on valuations and making the investors money as such, right? And somehow both have got sort of delinked, right? So Nimish, I mean, do you think the incentives are sort of misaligned in that sense? I mean, it's easier for a founder, or rather more prudent for a founder to raise at the highest valuation, make a quick buck in between than, really stay the course and build like a 20-25-year-old company like Zoho?
Yeah, see, I'm. It's difficult for me to give any definitive. These are personal opinions, but I just feel I have slightly different views on this. The reason is, see, ultimately it's a market, and there's a buyer and a seller. So while we can always debate founders doing secondaries is right or wrong, clearly the last part is dealing. It was dealing for the last 3-4 years. The business and the valuations and founder incentives were dealing. That's one. Now that was wrong. in first place, because they have to be linked. But once they are delinked, what ends up happening is people will optimize for whatever outcomes they're incentivized for. Sometimes I feel it's very idealistic for us to sort of expect that anyone won't optimize. So, what were the incentives? So, let me put it this way: incentive for VC was deploy as much capital as possible, then you start earning the fee on the deployed capital, raise the next fund, and increase your AUM. And anyway, some valuation increase was happening in exist because of the boom, so you could show the performance to your LPs. For founders, the thing was partly due to what you've seen, the disproportionate success of a Facebook or a Amazon or Google. Everyone was thinking, influenced by VCs or others as well, that all businesses are winners take all. So we have to be first there, burn money,
Very important
get
point.
market share is above everything else. So obviously you say, okay, if I show a certain market share, whatever way, I'll get the next round at a higher valuation. So that leads to bad behavior. So I think it was ultimately the crux is cost of capital was zero. So that has led to all this behavior. It has happened, and I don't think it was a local optima which investors and founders are sort of opted for. But as we can see clearly, it's not long lasting. And see, that's always the reason only few companies emerge and they are survive for 20-30 years, right? Because anyone who's sort of opted for some of these shortcuts, they don't survive. But will I completely blame? And I think people take advantage from whatever is there in front of them. So yeah, that's how probably most people did.
Yeah. No, people play the odds, right? I mean, you negotiate with what leverage you have, basically.
Yeah,
And
and that
if you look
higher
at,
valuation and all, I don't know, Gary. I mean, having been on that side, you generate higher valuation because you feel okay. There are two aspects. One, you think you can, existing employees feel happy. Oh, my mark to market of my ESOP is this. They might stay. It's employee retention.
And even
Second,
from the perspective of funds,
existing investors, they show markup. So sometimes you've seen existing investors only leading higher valuation
yeah.
markup. I mean, someone was losing at that time as well. Probably who were losing was the LPs, and they were losing in some way, indirect way, because the money was not
And
being
then
right.
investors do the markups, then they go back, raise larger capital based on paper valuations.
So everyone was
So
playing
it
that
goes
game.
on. Yeah. It's just a
Everyone.
self-serving game at every level for everyone. Frankly, whoever has done this kind of stuff.
But of course, the thing is, because of the low interest rate environment, it happened at a scale which was probably 100x, or I don't know, maybe in that range of what we've seen. Of course, we were not there during Great Depression and all what happened with the causes. So I don't claim to understand that, but at least in my 20 years, 22 years, what it has happened at a scale which was much higher than any time before. So the effect will also probably be more intense and long lasting,
yeah. No,
is
I'm
my
reminded of,
And just one more thing to add to this, actually, the effect of ZERP, near zero interest rate policy. So even for large corporates, right? Like if you are a Walmart or a Amazon or any large corporate like that, and you're able to issue long-term debt for tens of basis points, which many of these companies did, they're also raising basically essentially free capital and funding loss-making businesses across the world, including in India. And I mean, what Nimish is pointing to, I think, is that it just comes downstream from there. That some of the misbehavior or misconduct that we can today say that, oh, why were they doing that? Well, it is probably a function of that larger environment where capital was so freely available and so cheap. So maybe it is not something which is, maybe people are simply responding to the environment in which they were operating. We can also see it in that light.
no, and if you look at recent phone pays raise, right? They've raised at a, I don't know, $12 billion valuation, right? Which is like almost 60x of whatever revenue they're generating. I think probably close to around 200 million, right? And then the exact, perhaps similar business, Paytm is trading at about 5 or 6 x the revenue that they have, right? in the public markets. And of course, I mean, all of this is possible because Walmart itself has sort of underwritten that round, right? I mean, they have led the round basically. So, I mean,
Yeah, and sometimes there are I don't know like the accounting for that how it works,
hmm.
but sometimes companies like SoftBank have also done this. They lead an insider round or a quasi insider round essentially to provide a markup, and then when they report results they can show a markup of some type. So these are some games that people have played and they continue to play. So I'm not sure. I mean, I don't know how PhonePe was valued, but yes, it does seem on the higher side to me. It does seem to be on the higher side.
Right. Nimish, last time we spoke, we were super optimistic about tech IPOs, right? And, Rajiv just mentioned the whole stack of capital raise has opened up for Indian founders, so to speak, right? I mean, from Series A to retail. But that has been a sort of a failed dream, right? I mean, if you look at how they've performed over the last year or so, whether it is Zomato or Paytm, all of their stock prices have been cut severely. And also, I mean, the SEBI has recently, like, increase the time to list also. I mean, today it takes 150 plus days for the whole process apparently, right? So what do you see this? I mean, do you see this whole IPO thing as a temporary sort of a blip, or do you think it's a failed dream for a while?
So I think, see, I'll de-link two things. One is the valuation. Everything was overvalued, India, US, everything, and that has corrected. So that is one. And second is the fact that some Indian, not the IT company, tech company actually went IPO. So I think these two things need to be dealing. So in the first one, yes, valuations are low, market sentiment is bad, and all companies which have been valued at say X valuation in the private market, if they were to come to the public market, probably no one is going to offer. IPOs can still happen, but maybe no one will offer them zero point 0.2 or zero point 0.3x. That's the scale of correction that we are looking at, which is why they want IPO. So that's one angle. But what happens is some companies going IPO and getting sold has a downstream effect on more early stage companies getting funded and all that. And there has been a correction in valuation across. So it's ultimately risk reward, right? What I felt in early stage was good at 50 million valuation was not good, can seem okay at 20 million because the risk reward changes. So I think, so that's where I feel is going to be fine, because ultimately if some companies have gone IPO, there will be a belief and there will be examples to show that path is possible. And which was not the case before Paytm, Zomato, Nykaa, however they might have performed. But now there are many. Only example we had was Flipkart, which was bought out. The big example. Now you have like five, six companies which went all direct all the way to IPO. So I think that is
Yeah,
a
even
very
even
powerful.
even this year, like a SaaS business like Traction Technologies, for example. I mean, not like a colossal IPO or that much of a hype and attention, but it's kind of raised enough capital that it requires, and just the fact that the market is being receptive to these kind of new age companies, I think very big positive actually. So
So I think there'll be a valuation and all that will be there. And but there is some market which people thought there wasn't any. So I think that's the delta. But yeah, I mean, what is going to stop these IPOs in the next 12, 18 months is the inability to take that 60-70% hit while going public, because that's a reality. So anyone who's valued at 5 billion, I would be surprised if like they go more than 2 billion or 1.5 billion valuation. They won't get, public market is not going to offer. So that path is going to be challenging, but overall it is good. I mean, people can now invest assuming at least there's a chance of these things going public.
Yeah. No, I think bunch of these folks have delayed as
I
well,
mean,
like
I just had,
Pharmacy
which
and so
also
on.
sort of encourages a lot of risk taking in the US, because a lot of companies get acquired and a lot of companies go IPO even at a very early stage. And that results in a very thriving early stage ecosystem. India, that was absent. So now some of that might come through, not to the extent of US, but yeah, I guess.
no, and to some degree we should remember, right? Like companies raise money to keep growing their business, right? So if you can access capital at different stages in private and public markets, and you are able to grow your business because of that opening up, that's a terrific outcome for the entrepreneurial landscape, for the corporate sort of landscape.
Yeah. No, for sure. I mean, access to capital, I think, is a net positive anyway, any which way you look at it, right? With all of, we've spoken about plenty of the excesses, but the fact that startups
Yeah,
have become mainstream.
because in the discussion of valuation and fundraising and all, people often forget in an odd way, why are we doing it, right? We
Yeah.
are doing it because the business has to grow.
No, I was just saying the fact that startups have become mainstream, right, is amazing, and we need to thank perhaps all of the capital that's come into the system in part for that, right? Okay, let's move on from funding and valuations. Let's look at some innovation, right? Let's look at sectors. Rajiv, this year, what were some of the sectors that kind of stood out for you?
So one thing I've noticed, Roshan, is that in areas which are a little bit off the beaten path, like where I tend to focus, so frontier tech, hard tech companies, areas like electric vehicles, drones, and so on, among them, I'm finding that companies are continuing to see very good traction. So EVs, we've all been seeing in the media, like the sales numbers are sort of off the charts actually, and many of these companies are even on a unit basis growing, with gross profits, with like good economics. So they are tripling, quadrupling revenues on a year-on-year basis at a time when economic headwinds are there, capital markets have been difficult, and with all these kind of macro constraints, there is still growth. There is still, traction that these companies are seeing, so the capital has also followed them. So there's a space tech company which has raised 50 odd million recently. The electric vehicle players have raised capital recently, probably on the order of like 200-300 million dollars plus cumulatively, if not more. And much of this is also driven by higher level sort of government policy, where obviously government opened up the space industry to private participation in 2020. So then we are seeing in the last 2 years there's private capital flowing into it, and Indian entrepreneurs are actually building companies which could compete with some of the iconic companies in the US. And likewise with EVs, the policy of taxing fossil fuels or taxing petrol and diesel, with and keeping that per liter cost high, the policy of giving benefits for those who are buying EVs, whether it's EV two wheelers or three wheelers or four wheelers. So there are a range of like policy measures which have been nudging consumers that if you're thinking of buying a new vehicle, maybe you should think of electric. And the government's intent is very clear here, that they obviously want to take the pressure off the oil import bill, like to some degree at the margin, control India's heavy oil imports or limit India's heavy oil imports. And that's why they are pushing this energy transition of transportation, like trying to electrify transportation, so that we domestically generate that electricity and we consume it in different modes of transportation, from kind of commercial transport to like passenger transport or whatever. So I'm finding that in certain sectors like that, there are actually number of tailwinds, and these companies are actually growing counter cyclically, and they're seeing, they don't have to push their product into market. They're actually seeing demand, and they are actually in a way even struggling to meet the demand that they're seeing because of other kind of issues related to the industries. It could be supply chain, it could be like difficulty of procuring raw material and disruptions because of lockdowns in China or war in Europe and so on. So they are experiencing these disruptions, but the market pull is very obvious.
No, I think these folks have experienced a double or triple whammy, right? I mean, in the sense that, yes, there was capital, along with that, there was meaningful industrial policy, and along with that, the geopolitical factors. So, if you look at EV, for example, right, I mean, the FAME subsidies have been significant, right? I mean, the fact that, a bike is 20 or 30K cheaper is significant, right? Especially for the Indian consumer. Then,
No,
if you
and,
look at,
and there is a clear payoff in terms of savings, right? So if you're driving a certain number of kilometers per day, if you're riding certain number of kilometers per day, it's actually a no-brainer. You can do the math on the savings that are available. And this actually makes a huge difference for those who are running logistics fleets. So all the delivery companies, obviously e-commerce continues to grow at a very rapid pace, and the enablers for all those kind of product deliveries, food delivery companies, etc., etc. So they are all kind of electrifying their large fleets. There is a consumer level pull where the person who's riding a two wheeler is making a calculation that it's more expensive. If I'm riding X kilometers a day, it is obviously more expensive, and I have a clear saving if I buy the electric bike or electric scooter. And they are making that decision, and that thus you have a very strong market pull.
Yeah. No, and this is something that's a continuing trend, I think, especially given the government's focus as well. I mean, I have a bet pending with my friend that by 2030, at least some segments will become majority electric, right? And it's moving in that
Yeah, in
direction, I
fact,
would
in
say.
fact, I would say three-wheelers will probably go almost fully electric
Yeah.
very quickly. Two-wheelers will take more time, and four-wheelers will take the most time, I would argue, because cars are essentially the price point at which India buys cars. Getting an electric vehicle to that price point will somewhere probably prove to be challenging. So we are still at around, I think the latest Tata car is around 8-9 lakhs. So that is still, we need to probably cut that in half, which will be a little bit of a challenge, I feel.
Right. Nimish, any sectors that stood out for you? I mean, of course, you operate in SaaS right now. So you could talk about that or fintech, anything else?
Actually, I have been sort of so heads down building. So, as I mean, Rajiv as an investor gets to sort of sample the wide variety, and but definitely, I mean, from afar, once sometimes I read the space tech, drones, EVs, and definitely some hard asset. They are like hard assets, right? In some way, I think wherever hard assets are getting built, those sectors are probably definitely receiving love after. I mean, after a long time, there's a lot of focus, and maybe I would put that finger. I mean, there are always this, but that's too minor, I would say. But these three things from afar, I feel those are the things which sectors which I have been seeing some activity. I mean, it's not like a lot of activity, but the delta is been pretty high in some of these subsectors. I think even SaaS, and see what happens wherever there aren't big listed companies. Wherever there are listed companies, the sentiment of the listed company follows into the private markets. So some of these emerging areas there aren't. I mean, Tesla was one, but that's a different thing. People believe what's possible. So EVs are there. Space tech and drones. I don't know if there are a lot of big listed companies. Maybe I'm just ignorant. So some of these people feel the possibilities and can invest more and more. I think that's definitely what I see. But beyond that, I mean, nothing much to add to what Rajiv said.
Yeah, so from my perspective, I think SaaS is like a decadal trend, right? Or more than that, I feel, right? I mean, I think it's perhaps 30 years in the making, right? I've always said that, look, I mean, we've slowly, gone towards the front facing side of things, right? I mean, we've been building these, supply chain software, accounting software, whatever kind of software for 40, 50 years as IT services, right? And now, over the last 10, 15 years, we've gotten to a point where we're fairly adept at productizing some of these and selling some of these and being front facing. And this whole phenomena of, hey, I mean, the fact that you have payment infrastructure that's fairly evolved right now, right? The fact that you have remote and virtualization, right, means that, I mean, you can actually sell cross country, right? I mean, even up until I think 2013, 14, it used to be that SaaS companies were, born in India, perhaps looked at Southeast Asia, Middle East, or wherever, and then chose US or Europe. But today, I mean, a SaaS company is global from day one, right? So I think those are irreversible sort of trends that have happened. I do feel the valuations were way, way out of whack, right? And we will see some churn on that front. I mean, uh, all said and done, I mean, if you are a Me Too company and you are in a market with 20 or 30 other people competing for the same amount of business, I mean, if you've raised at a ridiculous valuation, you're going to get chopped, right? I mean, it's, what should have been a 5 or 10% or maybe 15% lifestyle business is today somehow has become a 30 or 50 member business, which is yet to, achieve any significant revenue with, a high valuation that we spoke about, right? So, but yeah, I mean, I think people will definitely build more SaaS solutions. I mean, we have a wide base of IT talent here, so that will happen. On
No,
the
and actually, Roshan, just to add to that, sorry
yeah,
to interrupt, but just to add to that, I think the digitization that is sweeping across Indian businesses, that is creating basically space for Indian customers for the many of these SaaS players, right? So this was not the case, I would argue, probably 5 or 10 years ago. that even Indian businesses, including MSMEs, they are looking to sort of be sort of plugged in digitally. They're looking to sort of adopt some of these solutions for marketing or accounting or everything else that many of the vectors on which the SaaS companies are building up. Because earlier, many of and it's part of the whole formalization wave that is coming to India, right? Like if your channel is digital, if your operations get improved by embracing some of these softwares, many companies are actually proactively seeking out solutions. And obviously, the willingness to pay will be a little lower than what you might find in a Western market or in the US market. But nevertheless, like the whole beauty of this is if you can cater to the kind of entry level Indian consumer, then you are built to kind of globalize from that low cost consumer base. If you can service the Indian consumer or Indian customer, you can probably service anyone in the world.
No, but the other thing, Rajiv, what I notice also is the Indian business has learned to pay for software, right? I mean,
Yeah,
if you
yeah,
think about it, 10 or 15 years back, selling to SMBs was, I mean, there wasn't too many things more difficult than that, right? But today, I mean, startups are rushing to solve SMB problems, right? I mean, whatever
right.
these are. And some of the larger enterprises also have sort of digitized, as you mentioned. And so there's a lot more business. I remember talking to a SaaS entrepreneur, and he was talking about how India in Asia itself is a key focus for them, and they are selling 50K, 60K kind of deals, right? So yeah, I mean, there's a lot of optimism on that front, I think, for good reason. You mentioned paying customers as such. That's one change that I noticed on the consumer side of things, right? I mean, whereas earlier we used to think of India as a DAO market, and maybe the US or Europe as an ARPU market. That I'm not saying that it's completely changed, but I think it's starting to change, right? I mean, if you look at the monetization journeys of some of these folks like Kuku FM, Stage, Pratilipi, and the likes, right? I mean, getting a million paying subscribers in India, I think is huge, right? And these guys are just because of the scale, right? Just because of the scale of what is possible. And these guys are getting people to pay 300 or $400 for content, which is something that we consider entirely like a discretionary spend, right? So there again, I think the previous assumption that, hey, tier 2 tier 3 India doesn't pay may be sort of falsified, right? I mean, they do pay if they find value, right? I mean, it's just that previous generation of startups perhaps looked at it in the sense that, I mean, we thought that, hey, what are we consuming and what are they consuming? We just sort of copied the same things for them. But whereas, I mean, if you look at these folks, right, I mean, building content in Haryanvi, for example, right? I mean, who'd have thought of that, maybe like 5-10 years back, right? I mean, all of that has been made possible thanks to
And yeah,
also
and
this.
the infrastructure layers which enable
Yeah,
that. We've
exactly.
talked previously about like the
Yeah,
impact of geo, the
Geo one.
impact of UPI.
Yeah,
So that network penetrating across the hinterland,
yeah,
everyone getting on 4G, etc. And then the
yeah,
ability to pay, let's say, 50 rupees a month on the UPI rails.
yeah,
So these infrastructure pieces have actually come together, which
yeah.
enable all this terrific stuff.
But it's actually, see, the thing is, it's not that businesses haven't been built in India before serving the tier 2, tier 3. The thing is, you have to get the cost structure right. I think that's where a lot of the tech enabled or the tech first companies have sort of failed in terms of getting the cost structure right to service that. I mean, firstly, assuming that the smaller towns and all ARPUs will be similar as tier one, where itself the ARPU are low. That is there. That's a fallacy. Second, Indian customers are notoriously difficult to service. Their expectations are high for every price that they pay. So that's there. But just getting the cost structures right is very critical. I mean, you look at so many great consumer businesses which have been built in India, and
Absolutely.
distributing in smaller towns, cities, they make a good ROE and margins are good. It's just that their cost structures are geared. There's no free food in those companies
Right.
for sure, and no
Yeah.
Mac
Or
laptops
like
rolled.
massage pods or like video
I
game
mean,
rooms or
I think it's general that I think one that coming to this, relating this to the earlier point, I seriously feel, again, coming, one thing which probably Musk would do a great service is with 30, 40, 50% reduction in headcount. Actually, you can the remaining 50% can accomplish more. because one, everyone will be under scrutiny to really perform, and the general productivity will and the focus will be higher. Because see, just I was at AWS reInvent last week, and someone said entire AWS Aurora, which is like a really big, was developed by 25 engineers. Now, as you say, zero the 30 engineers. WhatsApp, the entire company had 30, 40 people. Now, if these businesses can be built by that many engineers, that lot of unicorns or every big company have 500 engineers. So if you just do that like to like comparison, there is a lot of, I would say, inefficiency. So getting this will drive automatically. If you have 50% less people, the cost structure has hopefully improved, right? In a meaningful, you have to just you have to still figure out the monetization, but I think getting the cost structure right is very important.
Yeah. Just to round things off on that whole sector discussion, I think EdTech was the biggest loser in relative comparison, right, to last year. I think the way the customer acquisition cost had ratcheted up in 2021 was just crazy, and even a net positive business like EdTech had become, something which lost money hand over fist, right? So
Actually,
that.
being a parent of two kids, like who are in elementary and middle school, I think it's just an evolution that was everything was under lockdown and people are consuming everything online. There was definitely a sudden jump in the consumption of, say, educational content online, and that led to proliferation of more companies. And this one natural thing which has happened is everyone has gone back to school doing activities that children should do, which is
So unlock
outdoors.
trade actually, unlock trade for edtech means that there will be fewer people sitting in front of a screen and consuming some of these like courses or other kind of products.
And that's one. And second, I think again, since I see it with my kids, and I'm sure it's true for a lot of people, is I would say 90% of the time, a lot of the content which these edtech companies have come up with, I'm sure there are nuances, is by, it's covered broadly by YouTube. So even if when I sit with my son or whatever, generally, I mean, it's I'm old now. I also forget a lot of physics, chemistry concepts. So how to just refer to YouTube. So I see everything is there, and I think
What do Maxwell's laws say, Nimish? You
I
want to?
don't know how to go on. The thing is, and the best part is, it's the YouTube automatically recommends the next video, which is the same as what the portion flow of the subject is. So it's by and large taken. It's free. It's taken care of, and you can choose. There are. I remember when in my 11th and 12th grade, just integral of root tan x used to be like a difficult one. Now there are 10 videos on how to integrate root of tan x on YouTube. Just go and Google. Imagine just one integral, not like integration, just one integral. So I'm sure there are a lot of such free videos. So that also that will have an impact. So I mean, maybe we are not the consumers of those things because we bring a certain foundational knowledge. A lot of other people who are not privy to that, so they would be going to edtech. But yes, just the amount of time spent by kids learning things online has gone down.
And the supply part is, I think, I fully agree actually with Nimish that the supply part, we really underestimate how much stuff is already out there in a freely available format, like without any subscription, without anything. So it's literally, you can learn almost any subject if you are devoted and you're willing to sort of spend the time. It's amazing what YouTube has done actually.
I think going forward, three things with EdTech, right? One is if you're selling outside of India, I think you will still have, money to make for sure, right? Second is if you're enabling schools and institutions, maybe with software and so on, software, curricula, etc. That could be an interesting thing for sure. And Perhaps the third would be some kind of mentorship. Like, I mean, I look at Scalar Academy, right? For instance, I mean, they're doing a ton of revenue, and it's a mix of mentorship plus learning, right? I mean, so these are three things that I think stand out. Going further for edtech as viable business models. Rajiv, let's talk about crypto. I mean, it's one of those exciting and equally contentious topics. And Nimish mentioned earlier, right, the internet, and then after that the iPhone, and perhaps all of us thought that maybe the crypto or the metaverse would be that platform level innovation that will drive the next economic growth, right? But sadly, it's been a failed dream, at least in the interim period, right? And given everything that's happened with FTX recently and the spin-off from that, what do you think is the future for crypto as such?
So I've always maintained that one has to be focused on what can you do with this? What can we create with this? Which, somebody obviously will, any user will have a exponentially better experience of using a crypto based product or service versus something else. And frankly, I would say probably 95, 97% of the companies, firms, startups in this space were simply not able to answer that question. They raised tons of capital. They got a lot of market traction when the momentum was available, but they were never really able to answer the question that what do you do with this and why should I use it. The only the slogan of the Indian sort of crypto industry was Bharat wants crypto or some crazy thing like that. Like, but why do you want it? There's no answer. So I do feel that, and obviously this, as we have learned in the last like year or so, that all kinds of scams were also taking place here under the surface of like funding and media hype. Number of scams were kind of festering, and they've all come out into the open. And frankly, these are scams which are some of the oldest scams in finance and banking. There's nothing new about them. It's almost boring as to how what a regular scam this is. And frankly, anyone who's aware of the history of financial regulation, I mean, this is why we have regulators. That like an exchange or a intermediary abusing customer funds, like siphoning off from one place to the other, and then the customers' accounts are emptied out. So this is why financial regulation exists. Having said that, there are a few players who have been consistently trying to develop use cases for the media industry, for the entertainment industry, for the music industry, for essentially creative artists. And I think we will see the impact of digital assets and crypto more in a specific subset of some of these industries, where there will actually be an obvious reason for both creators as well as kind of end users, customers to adopt this kind of technology. So I've always been a bit skeptical that obviously denationalization of currencies and crypto based sort of currencies replacing national currencies. I mean, I don't fully buy that. I don't really buy that. But I do think that, for example, a musician kind of pre-selling an album or a creative work to their fan base, like by issuing a token, rather than and thus like circumventing the record labels, circumventing the music industry kind of intermediaries like that. I think those will be powerful use cases. They may not be like multi-trillion-dollar use cases or something. Like this is not going to like just take over the world, and I mean those kind of extreme projections won't hold water, is my guess. But they will have high potential, high impact kind of applications like this in a number of industries such as media and entertainment.
Yeah. No, I think the biggest sin from a crypto perspective was conflating the technology with the asset and then the currency, right? Even the more optimistic ones, I am talking about the saner folks, right? I'm not the maximalists, don't really think of it as a currency right now. But then, if you think of it as an asset, something that people should buy and trade, then it should be regulated like an asset, right? Which wasn't the case. And which is why, I mean, as you rightly pointed out, I mean, some of these scams are as old as finance, right? I mean, front running,
As
for
old as
example.
anything in banking, actually.
Yeah, yeah. Front running, pump and dump.
It's just one stuff, like the kind of
Yeah.
stuff that is going on. Yeah.
Which
I
would
mean,
not have happened if we had.
the most egregious example is FTX, right? The same entity is a broker and an exchange and a fund. All three. It's like imagine a mainstream equity market exchange having these kind of obvious conflicts. I mean, it's just bizarre as to how this was going on.
Yeah, and imagine issuing coins yourself, right? And
Yeah, you create your own money and you say that this is worth X, and other people believe that. I mean, fascinating stuff actually.
Yeah, crazy. But I'm really hopeful that the technology use cases do come out, right? I mean, whether it is blockchain for land records, or in fact, Maharashtra government started this whole project of caste certificates and so on, right, using blockchain. I think those things are promising. We'll see how that kind of develops.
No,
So,
I do think we will see that happening. I think companies have already, they are out there working on this stuff. But again, it's not something where the whole country has to be trading coins or buying tokens or something like that, right? Like it had just become like a absurdity of speculation, and frankly, even in India, like I don't think many of the folks who are behind these companies even had any idea what they're doing. They were just riding the momentum, to be honest. That's the impression I got.
yeah, in any case, I mean, I don't think it's a great idea for 20-year-olds to be managing, billions of dollars of assets as such, right? As was the case with the FTX, for example. Yeah, so as we wind down, let's talk about, what we're optimistic for going forward. So, Nimish, we'll start with you. When do you think real growth will return? What are some startups to watch out for? Of course, we'll all be like watching from the sidelines, cheering from the sidelines for Amnic, right? Your startup. But what are some other things that we should be optimistic about?
See, no, I think one thing is, of course, thank you, and I hope we give something to cheer for. But in general, I guess some of the best companies have been built in the toughest times, and I think pretty much all companies are built during the toughest times. So I'm sure three, four really big companies will emerge, and from the current thing, and I'm especially positive about tech, whatever is automating a lot of stuff at a very simplistic level, because the drive to cut costs, to be more efficient, usually goes into, if it's a build versus buy, if there's a good product available, it shifts towards buy during such times when people don't want to add headcount, and a lot of tech teams were doing stuff just for intellectual stimulation, rather than that being justified by, as in other than that being justified by, uh, I mean, you could have might as well bought existing solutions in the market. So I think that's one trend that I would definitely, this obviously I'm speaking my book because we're operating in a similar space, but I feel that's one area I see more and more playing out really well. Now the other thing is, as some people are saying, and I have no view, I'm just speculating, if something like a new form factor like a metaverse and all becomes big, it will be interesting to see what impact it has in general, because there will be new operating systems, new form factors to consume, and a lot of new apps and all coming in. So I think would be fascinating if something like that comes up, but my brain, I can't think all about all that. But the possibilities could be endless if some new form factor emerges. But yeah, I think anything making technology more efficient, anything driving automation of where can be replacing people, I think the other kind of things which can really accelerate in the cut for the next few years.
So, Rajiv, same question to you. What are you optimistic for going forward? Anything on the industrial policy side and so on?
No, so I agree with Nimish that we've seen this time and time over across sort of decades that some of the really strong businesses, great companies are created in economic downturns. And in fact, I would argue that managing, smartly when you have lots of capital and you can do so many things, and there is generally a high growth environment, managing that smart and purposeful manner is actually probably more difficult than managing a business during economic headwinds and downturn phase. Because inevitably, when you have a downturn, you're forced to focus. You're forced to sort of say no to many things and just really figure out, what is the best, what are the few best things that one can do well, and just do those. Because the temptation with growth is, you would find, as Nimish was saying, you try internal experiments for intellectual stimulation, You pursue like kind of a strategy drift. You start doing things because you can. You maybe you needed like $50 million, but you raised 200, and so you have $150 million lying around. So then you say, "Okay, let's open a venture arm and let's start investing in startups." So this was happening. I mean, companies were doing that. So there's a lot of like defocusing which comes along with excess, and when that excess goes away, I think entrepreneurs and startups are required to very sharply focus on what is a must do for this business to survive and scale. So when you ask yourself those hard questions, usually good things happen. Then ironically, during the difficult phase is when many companies would actually create more value, destroy lesser capital, etc. So that's why I feel actually, in some ways, I actually feel that downturns do a lot of good in that way, where you kind of weed out some of the excess, and people actually start focusing much more. And then I do feel in India for a long time we've been a kind of a tech deployment market for many decades. It was just a kind of a geography where bigger players would come and be like, let's build sales and marketing here, and we also do R&D, but R&D is more focused on global customers and so on. But I do think what is happening now in India, and the shift we will see, is we will become an originator of new innovations, an originator of technologies, many things that will come in the next wave. And Nimish was pointing to some of these ideas with a new form factor in hardware, or a new platform and software integrated with that form factor, that could create new kinds of use cases, applications, and so on. And I do feel that for the first time we have the chance to play alongside the leading countries, if such a thing were to happen. Because uh, India as a country now, we've got nationwide 4G, we've got ability to make payments. So essentially, we figured out the infrastructure pieces. So it won't be a situation where some company outside takes the lead and then again comes to India for deployment. I think what could happen is some Indian company takes the lead in the Indian market and then is able to globalize and frankly become a pioneer of that category potentially. So that is what is truly exciting to me, that India is not starting the race, starting the 100-meter race with a 50-meter disadvantage. We are starting the 100-meter race, the 100-meter dash, probably at the point where everyone, or the kind of leading countries, are also at the same mark. So that's I think a big shift we have seen in terms of where the ecosystem is, and that gives me great confidence on all the things that are possible now in India to do,
Yeah.
which weren't possible
No,
earlier.
that's a great point that you bring up, Rajiv. Actually, I remember this VC, former VC, I should say, who would run this presentation where he would say that Facebook of India is Facebook, right? The Google of India is Google. In some sense, saying that hey, the global tech giants will be relevant in India as well. They are the ones who will rule the market here as well. But I think that is also starting to shift, right? I mean, you're seeing Indian solutions being built for India and then globalizing, right? I mean, I can think of a couple of
Yeah,
examples.
and frankly, it just comes down to getting. So you can't go global, I think, in that manner. It's best to go. It's best to globalize when you're funded by your customers. That's why it's here. So if your customers are giving you money and then you are globalizing, that's always better than trying to be global from day one, and then obviously you're trying to hold on different markets at the same time. But if you succeed in the Indian market, which is a very large market, and then you use that to sort of enter new territories, which is what frankly the American companies have been doing now for decades.
Yeah, yeah. No, and the great thing about our domestic market per se is that not just that internet penetration, right? I mean, our internet is actually monetizable, right? So the kind of spends that you see, the 10 rupee, 20 rupee, 100 rupee kind of spends are possible, right, in the far corners.
Absolutely. No, I mean, I can't think of too many countries which can facilitate micropayments in that manner. These are micropayments, right? Like you can, I mean, today with UPI, it's possible to get a 20 rupee a month subscription.
Yeah, exactly. And I think they're building out UPI in such a way that it'll probably do a lot more financial management as well, and not just payments and transactions and so on, right? If you look at what 2.0 of UPI, the policy that's come out.
So yeah, these are all very powerful sort of, I think, trends, and I think great reason to be optimistic coming like 2 years, 5 years, and so on.
Yeah, so from my perspective, I think it's a genie out of the bottle situation, right? Startup innovation in India will definitely continue irrespective of financial cycles as such. And the good thing is that there's been a trifecta of policy, innovation, and capital, right? All happening at the same time. We obviously we're calling it the funding winter, and as Rajiv mentioned, 35% down from last year. But even so, right? I mean, people are waiting with funds, right? Record number of VCs have raised new funds, and they're going to deploy over the next 2 or 3 years, and this capital is
No,
going
and,
to
and
flow
and
into.
frankly, more importantly, talented people are continuing to build things.
Correct, correct,
A
exactly.
lot of talented people are continuing to build things, which is frankly the first thing that you need. And I would argue that the number of people building things is probably increased, not decreased.
Yeah. No, and the fact that talent is available at more reasonable costs at this point of time is a huge differentiator, right? I mean, I know a guy who is in the market to raise just because he can't keep up with the salary costs that have gone up, right? I mean, in 2021 and 22. Right, so I'm also very optimistic for all of the other innovation in other sectors that are coming up, right? The non-hot sectors, so to speak, hard tech, for instance, and space and so on. So yeah, lots to be optimistic about, and the policy front as well. I mean, I think we can do a whole other podcast on that. Whether it's the national logistics policy, the drone policy, or even the way RBI has been, right? I mean, perhaps one of the sanest regulators. Yeah, I mean,
Most
lots
definitely,
of lots
very
of
creditable.
optimism for sure. Right, and this is a good note to end the podcast on. Again, thank you, Rajiv. Thank you, Nimish, for making the time. This was a fascinating conversation, and we should perhaps do a follow up maybe in 2-3 months' time, hopefully in better circumstances. Yeah.
Sure,
Yeah. Thanks,
happy to do it.
Roshan, for having us over.
Yeah, thanks a lot, Roshan. It was terrific. A lot of fun chatting with you as always.
Thank you for tuning in to this episode of the Bharat Varta podcast. If you want to see more content like this, then don't forget to subscribe to our channel. We started Bharat Varta to facilitate long-form discussions on politics, policy, and culture. We don't necessarily endorse anything that was said in this episode. If you wish to offer us feedback, do reach out to us on social media. We are at Bharat Varta on Facebook, Twitter, and Instagram. You could also get in touch with us on our website www.bharatvarta.in. The links are in the description below. Until next time, stay safe, take care, and Jai Hind.